Hello again, everyone. Welcome and thank you for joining us today. My name is Jessica Lopes. I lead business operations here at Jones, which includes our auditing team, the people who review every certificate of insurance, every insurance document that comes through our platform. I spend most of the last 5 years looking at what's actually behind COIs, and I can tell you it's very exciting. And today's session is called COI received doesn't mean COI doesn't mean covered. The hidden gaps that surface during claims. And the reason we chose that title is because for a lot of teams, when they receive a COI, it's the finish line. The certificate came in, the dates look right, the limits look right, the box is checked, the coverage is applied, but that's not the reality. And we want to talk about how that moment of confidence can be exactly when you're most exposed. And I could not have a better person to explain all this to you and explore the subject with you, other than Alison Christian, which is with Meritage Homes. And she spent almost 20 years working in insurance. She's seen it from every single angle, and she's going to bring the real world view here to this conversation while I'll add the auditing view, the perspective of the audit side. So, Allison, welcome. How are you
Ooh.
doing? How's the Arizona weather
Ah,
treating you?
it's wonderful. I can't we're in a cool spell today. It's only 108. So I have my jacket on. But we will survive. Don't worry.
Yeah, amazing. Yeah, tell the audience more about your experience. Please introduce yourself.
I will. Yeah, I have spent it doesn't feel like it, but I've spent 2 decades in insurance. It's been my entire background as an attorney. I've gotten to dive into all different types of policies, manuscript forms, ISO forms, in states all over the country, with all different types of risks and all different types of carriers providing the paper. And so I like to tell people that insurance makes the world go round because without it, you wouldn't be able to start your business or visit places and have the GL protection or drive your car and have the auto protection or go to work and know that you're safe with work comp. And so it is an aspect that touches each of our lives in a way that helps it go around. And the claims that insurance sees are each unique. And so there's never a dull moment in insurance. And as I'm sure each of you who touches this area can appreciate, no two claims are the same. And you get to learn a lot about individuals and their experiences and what can happen when coverage is not in place, and sort of the corporate side of it and the personal side of it. So I have really enjoyed it. In my present role, one of the things I do is manage all of the insurance for Meritage Homes, and the compliance for thousands and thousands of vendors that we work with all throughout the country. And so it's an exciting role to be in, and risk transfer is part of Meritage's business. That's how we are able to, because we sub out 100% of our work. That's how we're able to protect Meritage is through effective risk transfer. And that really only matters um, practically if you have the coverage in place. And that's obviously what we're here to talk about today is that the COI is not itself coverage, and there's a lot that can happen behind the scenes. So it's just an exciting topic. I'm a total insurance nerd. And so thank you to Jessica and the Jones team for having me here to talk about it.
Absolutely well said. Thank you, Alison, for joining us. I do want to drop a quick note for everyone watching that you can leave your questions and drop your questions on the chat. We will be addressing them at the end. So we're going to dive in right now with Alison. I want to hear more. I'm so excited about this. So take us back to before you guys had a system around COI review. What did COI review look like day to day? Who was doing it? Where did it live basically before Jones?
Before Jones, and even prior to the vendor that we had before Jones, it was manual. And I think that there are still a lot of companies that do a manual review, which means that you have a person going out and having to obtain from the vendors or their agents certificates evidencing the insurance, and then somehow manually keeping track of not only the data around that insurance, so policy number, effective dates, limits, but then maintaining and managing renewals, and looking at and obtaining schedules of forms and endorsements. And so it's at a smaller operation, perhaps that's something that's manageable. But as soon as a business starts to scale, taking it outside of that manual process is really crucial, if not imperative. And so we had a vendor helping Meritage prior to Jones that would help us obtain the COI and help us obtain the schedule of forms and endorsements, which is sometimes referred to as the SOE. But then it would turn over to our team to become a manual review of that SOE to identify only by name certain exclusions and forms that made up that policy, and then to as an individual to then go back and request copies of those forms and endorsements so that we could manually review them for terms that were problematic for our coverage that we were expecting. And so that is a very intensive process that takes up a lot of time, not just in the corresponding back and forth between the agent and the insured and Meritage to get all of the documentation, but then the individuals who are reviewing the policy are, they're humans. Humans can only do so much. And so that also takes time. And so as you start to scale any business towards size, and as you start to move sort of the velocity of your business towards speed, you have to start to consider additional partnerships and tools that are going to help you be able to do that review faster. And that's how we ended up coming over to Jones, was sort of in a search to be able to perform the compliance review, not only much more thoroughly, but faster. And so that technology advantage is something that I've really enjoyed and have seen, the benefits of already.
Amazing. It appears my connection is a little bit unstable, so I apologize for that. If I freeze, I will have another colleague join, but I hope that doesn't happen. I do have
Okay.
follow-up questions, Alison. Uh, First of all, who was reviewing, who was actually making the decision whether the certificate was good? I know you have a team under you, so I'm wondering if
Mhm.
all of them were insurance people or, PMs or coordinators. Like, did everybody have the actual, insurance knowledge that is required?
I think the person who was doing it before is somebody who I still work very closely with. Her title is insurance manager, but her background was not necessarily in insurance. And she was a paralegal by training. And so she did have that legal understanding of sort of the complexity of documents that have legal significance. And an insurance policy is one such document. So is a COI. And so she was somebody who was able to take just sort of that basic understanding of interpreting a legal contract and then layering onto that, learning about insurance. And one of the things that she had done was just sort of dedicate herself to outside training, individual workshops, and learning more about an industry that was obviously not her first and was not common to her. And then it was one of the reasons that I came over to Meritage was my insurance background. They were really interested in having somebody who had that strength in interpreting the policy forms and understanding coverage, and being able to communicate it in a way that was really understandable to lay people and everyday people. Because when you get into insurance language, sometimes it can sound like you're a lawyer. And that's not easy for business. That's not always the easiest way to do something. And so starting to be able to have someone who can not only digest the complexity of the concepts, but then communicate them in a way that your insureds and your vendors would understand, was what Meritage wanted when they brought me over. And it's something that I've been working really hard to teach my team, sort of in everyday terms. What does this insurance mean? What kind of a risk is it either accepting as the carrier, or is it excluding and then putting back on the vendor to have to bear alone? And it's been a really educational process to, have somebody with my experience level come over to the team to teach them about insurance coverage, and what these terms mean, and sort of, the difference between an exclusion and then an exception to an exclusion, and a grant of coverage through an endorsement, and an extension of coverage through an enhancement, perhaps. And so understanding all of those terms, is it took me decades. And so it's an area that I love being able to share and bring knowledge to the team.
Yeah, I completely everything that you're saying resonates with me so much because
Mhm.
we see, first of all, we see this everywhere where a lot of teams are not actually insurance experts. They're project managers, they're coordinators, they have another actual, job that then somebody just, came in and added insurance as part of the actual job.
Yeah,
So it's not easy. But also, here having a very large team of auditors at Jones, we see how dynamic it is. We have weekly meetings still this day. It's been, 5 years of weekly meetings. And, we did not run out of topics to talk about when it comes to insurance. So it
right.
definitely requires a lot of effort and a coordination with the team to making sure that everybody's aligned. That makes perfect sense. And I would love to get into that more. The title of the whole webinar is Received Doesn't Mean Covered. So I would love to hear,
Mhm.
your concerns about this and also, when this first became real to you, any stories that you might have about COIs that passed the eyeball test but did not hold up later.
Mhm. Mhm. Well, I love when you and I were getting ready for this, you talked about the term false confidence. And I think that that is such an important concept when you think about what people believe they have when they hang on to a COI. And if you even, I've got 4 points that I want to kind of share with this team for what I consider to be very high risk blind spots that will be absent on a COI, but is really important for a team to be reviewing or capturing on the back end. And it starts when you look at the ACORD form that the COI comes on, it actually says that this does not confer coverage. This document can't contradict the policy and does not confer coverage. So it is merely evidence, um, probably manually entered by somebody, but evidence of what exists in a policy. And that policy is the document that governs the rights and the duties and the obligations. So it's missed, but that certificate does not do anything for you, really. You can't walk into a court and say, look, I have the certificate and therefore I have the coverage. You can't attach it as, as evidence of insurance protection. Um, it's just sort of a reflection of what might exist on a policy and you're hoping is accurate. So that's a good step to just never trust that ACORD form and it even, to heed the wording that is on it itself. And some of the areas that you will notice and that I've helped bring the team sort of awareness around is that you just start at the beginning. And one of the first things and data pieces that you're going to see on that COI is the named insured. And that can be misleading. And so it is very important for people who are looking at COIs to first start with that identity of the named insured, because that you're going to need to check to see, one, is this who I thought it was going to be? Is this who I am contracting with? Is this who my business relationship is with? And if it's not, what is that entity's relationship to my business and why are they on here? We see this a lot when you have a master policy, for example, that you'd see a really large enterprise, just someone who has operations nationally, if not globally, that they have these master policies, but the name on that policy may not be the person you're trying to get coverage with. And so you have to start, the first place I always like to start is diving in and understanding that relationship of the named insured to my transaction and making sure that those dots connect. And so if it is a master policy, you're going to want to request the named insured endorsement, sort of the broad form named insured endorsement. Understanding, okay, if it is a master policy, I need to see with my own eyes that this subsidiary or this affiliate or this holding company is actually covered. I can't just take your word for it. So even though it says on the ACORD form certificate named insured, you do want to make sure that you've seen a declarations page or a named endorsement page somewhere that does confirm that the entity you need coverage from actually has coverage under the policy. So that's a good place to start. The next gap that you're going to see on a COI is there's usually a spot that will say deductible, but there is not a spot that will say SIR. And an SIR is a self-insured retention. And that self-insured retention is really significant when you're an enterprise that's looking to risk transfer, because what it means is that that's an amount that the individual who's or the entity that's listed on that COI has chosen to hold on to as a risk that it's going to become the insurer for that amount. And so it is not typically disclosed on a COI. What you would see instead is deductible. And so one of the big gaps that I would really recommend people look for when they're trying to protect insurance compliance is getting a copy of that deductible endorsement, if there is a deductible identified, so that you can confirm how it is being applied, not just that it's there in the amount of it, but how is it being applied? Is it per claim, per occurrence? Is there an aggregate? Is it a per project deductible? All of these things that would matter when a claim does finally arise, you're going to want to see that. And we have learned through, and I know Jones has been a big part of this journey with us, that because the COI does not ask for disclosure of an SIR, it is something that teams themselves have to go investigate. And so I am a huge proponent of always asking in this transaction, when you're getting the COI, to also get a copy of any SIR endorsement, so that you can read that language. And there's some that are ISO based, and ISO is insurance services offices. And those are just more formal official terms, but there's others that are manuscript forms, meaning that the carrier has come up with the form itself. So you can never just assume that if you've seen an SIR or a deductible disclosed, that that's the end of the story. What you're going to want to investigate further is, does that SIR apply to create a gap in coverage if it's not fulfilled? So for example, if it's an SIR of $500,000, but the policy limit is $1 million, does that mean that if the named insured doesn't pay 500, the insurer picks up at 500,001? Or does it mean if it's not fulfilled, the insurer pays nothing, and it's essentially a condition precedent to even accessing the rest of that $1 million in coverage? And so those are all terms that are part of the contract. And when you're getting the COI, you're not a party to that contract. So you would need to see what they've negotiated in order to understand it. And then for somebody who's sitting in my shoes as sort of the enterprise risk advisor, you need to then communicate back to the enterprise, this entity has a $1 million SIR or a $5 million SIR or something that is significant, because that really does change the relationship between the parties if and when there's a claim. And you can take individuals or entities who are partners in a business, or just have ongoing operations all over the country and multiple projects underway. And if there's a claim in it that's going to impact that coverage, that business partner becomes your insurer. And so there's an adversarial element that enters that business relationship. And so I think that that's important to understand when you're advising an enterprise on risk, to appreciate that that is then going to change the dynamic of the relationship. So that vendor could be able to say, oh, I don't want to accept coverage. I don't want to pay for your defense. And you're going to be on your own. And I can leverage the fact that I've got all these contracts lined up to keep doing work with you to get you to go away. And so the difference between an SIR and that adversarial relationship with your vendor versus it being with an insurance company who you don't have a relationship with is really important to consider. And that's an absence on the current ACORD form. So it's something that we look for a lot. And, since moving over to Jones, we've really gotten to see disclosure of a lot of SIRs that the business did not know we had out there. And sometimes you can reach an agreement on lowering that for Meritage projects, lowering that for a certain location or a state. And so it's just an important conversation to have, as business goes forward. The last gap that I see a lot on the COIs that's really important is there's usually a space to sort of write in additional comments. And what people like to say in there is something to catch their AI coverage. So the additional insured status, they'll try to write in there that, Meritage Homes and its subsidiaries and affiliates are additional insureds on this policy. And you, as the person looking at that COI, have to recognize that doesn't mean anything. That does not mean that your company is automatically an additional insured. And it doesn't mean that there's a specific endorsement that has your entity as an insured. That description on the COI was just put in by an agent, probably because the client said, hey, I have this contract. The contract says this. So that is just an agent reviewing what a contract requires and putting it on a COI. Again, going back to that admonition, it is not evidence of coverage. So don't just trust that description. What most insurance policies have for that AI coverage is something called a blanket endorsement. And so the blanket will only capture AI coverage for both, ordinarily for ongoing and completed operations. That's what you're wanting to see it for. But it's only going to catch it if you have a written agreement with the named insured, requiring that entity to have the AI coverage. And so you need to understand if that's what the policy requires, a written agreement with the named insured. You need to go back and make sure that that's what your paperwork is going to give you the right to. And so that's going back to look at the contract that underlies the COI and making sure, okay, who am I contracting with? Do I have a written contract with the entity that I need to contract with to catch the blanket? Do I have the ongoing operations and the completed operations, or are those separate forms? You see them more regularly included in a single extension or an enhancement that's going to have both forms of the AI, but there are those that still, that exist in separate forms for completed and ongoing. And so you may only catch one. Um, but looking for that and understanding what the written contract needs to require. It'll say it's primary and non-contributory if required by contract. Okay, well, what does the contract say about that? And so those are the types of things where you really have to question what you see in the description um, of who of what the AI is in that, and go back and verify that both the policy and the contract line up to give you what you really need. And I think the last point is that it kind of ties into this is that you see the identity, and I've sort of gone through the ACORD form from top to bottom, but you see the certificate holder on the bottom. And that is also not always evidence of who really is covered. And so the certificate holder just means that you got a copy of the COI. It doesn't give you any particular rights or benefits under the policy. It just means you're getting a physical copy of the COI for whatever reason. And so entities really, and people sitting in my shoes or in anyone who's looking into insurance vendor compliance really needs to appreciate the limitations that are on that COI document and see how important it is to get full policies or full copies of all of the SOE to take a look and dive into what the provisions really say.
Yeah, Alison, perfect. I love how you pointed to things that we see every day here at Jones. And
Mhm.
I'm also delighted about this conversation on the aspect that we haven't even started to talk about exclusions. You've
Yeah,
mentioned, collecting the declarations, the schedule of forms, but everything we're talking about here is just like the basic requirements we're asking for, looking at on the COI, and
right.
they already present so much risk. We're not
They
even
do.
talking about when for any reason that interior worker, a
Yeah.
vendor has a residential exclusion when the only work they're doing for you is residential. We're not even talking
Hmm.
about that yet. And it's so,
Right.
interesting for me to hear from you, your experience with the blanket endorsements. We've always have these conversations with customers. We having more and more of these conversations with customers about how some endorsements we have built in huge endorsement index at Jones, where we know, the ones that include that contractual privity language where upstream party are excluded. If you have not actually signed the contract with the
Right.
subcontractor, you're not covered,
Exactly.
right? And then you're not actually seeing any of that if the only way you're tracking the additional insureds is only on the description of operations box of a COI. You definitely
Hmm.
need to collect the endorsements themselves. And then, I cannot tell you how often we see schedule endorsements with just that schedule box empty, which means
Hmm.
you don't know who's getting coverage at all. Like
No
you
idea.
don't name the specific entities. You do not include some type of, blanket language. So it's so interesting to talk about this because I think goes over people's heads. They do not
Hmm.
realize how on this simple topics like the certificate holder not giving you any type of access to the benefits, or the
Hmm.
additional insurance being listed on the COI, meaning absolutely nothing unless you're
Nothing.
actually looking at the endorsement itself. And you also brought the point of ongoing and completed work, and how sometimes, you have been listed in the schedule box of an ongoing endorsement, but then, most of this claims are going to come up after the work has
After
been
the fact.
completed.
Right.
Yeah, and then you're
Yeah,
not covered at all. That's when you cease to be an
exactly.
additional insured in that subcontractor's policy. So all
Yeah.
of that is quite interesting. I would love to hear, more about the process you guys established, because I know the process you guys have on your account, and I think it's one of the best ones we've seen. It's an example to all of us. We
Mhm.
give it as an example, like, we have a
Thank you.
customer that does this, so it's a great one. And
Yeah.
I would love to hear you explain more how you've been using the schedule forms to try to catch the exclusions as well, and how
Yeah.
you might have everything we've described, everything might look perfect, and then one
Hmm.
single exclusion can throw everything to the waste. So just tell us more about exclusions as well, please.
Yeah, and I like to start the conversation where we did and then move into exclusions because in the law, that's where it starts. The person seeking coverage or the entity seeking coverage first has the burden to bring the claim within the insuring clause. And that's the place where you find coverage. And that is on the AI or the named insured to come forward. And so establishing your right to that coverage is just the beginning. And that's kind of what all of what I just talked about will get you into that, establishing that you're allowed in the insuring clause in the first place. Because it is then, once that is done, the burden shifts. Under the law, the burden then shifts to the insurance company to prove application of an exclusion to a certain loss. And so that's when, so as the burden shifts, then you want to be proactively aware as a risk manager, an insurance manager, of what arguments an insurance company might make to come forward and say, great, I'm so glad you brought this claim to us. Ooh, sorry, it's actually excluded. And so that's where I think it has gotten increasingly difficult to stay ahead of where the exclusions are. And I think so, relying, like you mentioned, that there's a library of forms and there's a bank of forms, that the industry will evolve faster than the forms can keep up. And so when you see these manuscript endorsements, they may catch something that is not in anybody's bank and it's saying the same thing. They're just finding a way to get around sort of the the review, and it's becoming this blind spot. So one of the things that I did when we moved our compliance over to Jones, because again, I love the technology forward thinking in Jones. It's utilizing technology and AI to our advantage for efficiency and for to be able to catch details that maybe a human eye that's reading pages and pages and pages of insurance might miss because the technology doesn't miss it. We have shifted to requesting entire copies of policies, complete copies of policies on certain vendors within certain risk profiles for Meritage because of this issue that you're talking about with the exclusions. Because what we've been able to do then is feed into the review process, not just certain forms, but the substance of what we're concerned about. So if you see something like, if you see these terms, contractor bodily injury exclusion, subcontractor injury exclusion, residential tract home, you see subsidence exclusions. So the substance is something that you're then able to communicate. That's the risk I'm trying to protect. And so I need to catch if that policy has something in there that is going to take that away from me. And so the biggest ones that we have been facing recently are this bodily injury to contractors. It's an expansion of the employer liability that is standard in the ISO-GL form. And that employer liability is out there so that technically everybody would be able to expect that you're not going to have GL coverage if your employee is injured. That's the function of work comp. And so that is a natural expected exclusion that somebody's own employees are not going to have coverage under a GL because they should be covered under comp. Now, what the carriers have done to expand on that exclusion is to say, not only am I not going to cover your employees, but I'm not going to cover injury to any employee, period, or to any subcontractor, period, or to anybody working on your job site, period. And so it has become an incredibly broad way to exclude injury claims in a manner that would be sort of missed on a cursory review because they would think that it is just an employer liability, which is sort of expected and usual. But it's the language in that form that really is problematic. And that's what people need to be capturing. And so to see that in an SOE and to be able to catch it in an insurance or inside the entire policy is something that we've loved the utilization of Jones and the technology for because it finds it, even if it's hiding, it finds it. And it is so that's an example of a risk that, if you do have, and this is, without talking about any specific claims that are, ongoing or open, it is not uncommon after a significant injury claim for one of the first questions from the business to be, hey, we have coverage for this, right? You are going to see that if somebody gets hurt at your business, if or your business hurts somebody, that the question is going to come back to you, where's the insurance for this? And so understanding, and those types of injury claims can sometimes be ones that are significant damages. And so understanding where do I find that coverage, and are the carriers trying to find creative ways to get around that coverage for those big risks? It has really been very, very important. And what you do then is when we find it, because we found these exclusions, as your team knows, a lot recently. And so it's an educational process of not just educating my team, watch for this, and business team, watch for this, but it's also educating the vendors that we're working with and the insurance that we're working with. Please understand, this is where you do not have coverage. And I don't know that you know that. But if you don't have coverage for it as a named insured, I don't have coverage for it as an additional insured. And so that's a problem for me. And having those conversations with the agents to then go back to the carriers is an important part of the discussion. And it has to happen before the claim. You can't wait and try to fix these problems after the claim, because that claim is going to be looked at as a snapshot in time of what was the coverage that was in place at the moment that person got hurt, or at the moment the building collapsed or the fire started. You cannot go back retroactively and find these issues and fix them. So that proactive approach to looking at the coverage is so critical to making sure that your ducks are going to be in a row, kind of in the moment of chaos when there is a claim and it is significant. Then you don't want to be having to go back and have somebody say to you, hey, did you know that they've got this exclusion? And that's happened. I mean, it happens, especially when you see the tail for construction defect claims, which can be up to 10 years in some states. And you're going back to look at policies that were maybe negotiated or were in place prior to somebody with 20 years of insurance experience and Jones's technological advances being able to help with the policy. And that claim that is now going to trigger a 2020 policy or a 2019 policy is going to have a form on it that maybe somebody else didn't catch. And that's going to be a problem, because you cannot go back in time and fix it. And so that's why it's really critically important to look proactively at the risk that you're trying to transfer, to make sure that that transfer has happened effectively. And then also just educating the partners that you're doing business with about where they have exposure, because we really do appreciate and hear often, especially since making the Jones transition and going back to our vendors and saying, hey, did you know, by the way, you've got this huge SIR and it's per claim, it's per occurrence, and you don't have coverage for tract home or any the subsidence exclusions that it has. If it's in any way kind of maybe sort of probably kind of related to dirt, you're not going to have coverage. And it is, I think, helping educate them is they then value that in us as well, to say, hey, we didn't realize that was happening. We've seen them actually move carriers because of it, and to say we appreciate you bringing that to our attention, because it's easy to lose. Insurance policies are dense, they're long, and they're very complex, and they work together like a puzzle. So having those puzzle pieces and then feeling like you've got a puzzle that looks really good when you look at either the declarations page or the CGL page, and not realizing that those exclusions take pieces of the puzzle away. And that if you were to ever have a claim that fell into one of those missing puzzle pieces, you're going to feel awful about it if it's your job to kind of be watching these risks. And so, it's different for every business. I can't say that everyone has to be looking for, residential tract home exclusions or subsidence exclusions or townhome development exclusions or condo conversion exclusions. It depends on your business, and it depends on what it is that you're doing and what you really need protection. But it's important to understand whatever is out there. If it's a landlord tenant issue, okay, is there exclusions for tenants that had a certain credit rating, or is there exclusions for this number of short-term rentals in the area then not being entitled to coverage? Or if it is a short-term rental, actually turns out we don't cover that, or you're driving an Uber, and Uber, your insurance policy doesn't know that you're driving for Uber. So whatever the risk is that is important to you to transfer, I think understanding what the industry is doing with forms that could impact that, and then partnering with somebody like Jones to help you really dig in and figure out what is behind the declarations page and behind the SOE and behind the COI, to figure out when a claim comes, what is going to be on my plate.
Yeah. Perfectly said. I think that's such a great point. The point of like educating and treating, the vendors as partners, because at the end of the day, I completely agree with you. Many times they don't even realize the exclusions that they have on their policies, the fact that they don't have coverage for something. And it's why also we say here in Jones that compliance is really a claims readiness function. Every certificate we review, every document that we get, we're really
Mhm.
answering one question. If something goes wrong on this job, will risk actually transfer the way that the contract intended? So
Mhm.
that's the job that we're doing here when we're reviewing these insurance documents. And Allison, I think you already kind of like touched on that, but I would love to just give you the opportunity to, say that again. And, if you were to give somebody an advice on, maybe somebody that is not an insurance nerd like we are and that have no insurance background, what are the two or three things that you would tell them? Like, you have to do this. This is where you need to pay attention. Yeah, give us a
I
few
would
words on that.
it is the intersection between insurance and contracting is just inseparable. You have to be able to have strong contracts at the foundation of any of these conversations about insurance. And so what I would do is I would start with every business out there sort of having a template and having master provisions of what it is that you require in terms of insurance from your vendors. Every one of the builders in our space and Meritage, we all have a list of requirements, and that these have to be agreed to, negotiated, contracted in the master agreement with the vendor or the business partner, whoever it is. And it is you look at it based on we look at it based on the scope of the risk. And so, from people who clean model homes and houses all the way up to master land developers who work with us on massive projects, and understanding and tailoring. Okay, from you, I need this GL form, and I need this GL level, and I need this AI protection at a minimum, and I need primary non-contributory, making sure that that's in your contract. With architects and engineers, surveyors, professional consultants, attorneys, you're going to want to get that professional liability coverage. And so outlining and understanding how much you want, and how long you want them to carry it. You have to think about what's the tail on a claim that could come up. And I'd want them to have that coverage in place for the length of that claim tail, at least, to be there to have that money behind us. And then two that are really significant and are sometimes overlooked, and they can be jurisdictional, especially in places like Texas and other places, but workers' comp and auto. I think that those are spaces that are overlooked sometimes, and those are both spaces where there is a significant potential for injury claims. And so making sure that somebody has comp in place, and if you're doing operations in multiple jurisdictions with an entity, making sure that they have comp in place that covers all of those operations, is really important. And I know there's some states that allow for waivers for certain numbers of employees on comp, and then you have to be able to take that decision about a waiver back to your business. Because if there's an employee that doesn't have comp above it, that's going to be working on your job site or for your project or at your business, that's a risk you have to be aware of. And the commercial auto space is also ripe for big injury claims. And so requiring anybody who's going to be driving your products around, driving your employees around, on your job site, operating a motor vehicle, having that commercial insurance is really, really important. And I think that there are sometimes, we have to negotiate where they said, I'm only going to be on this job site for this amount of time and I'm not even there that long. And I'm like, it doesn't take that long to hurt somebody. And so the critical importance of having that commercial auto, and they're like, well, I only have my personal auto. I'm like, well, that may not even apply if you're at a work site. And so I just caution people to really get very strong contracts in place, outlining what the insurance requirements are, maybe even having auditing standards internally where you're not going to accept reductions on limits, or you're going to accept only an SIR of a certain amount or below and not above, and what those checks are for what it is that you are going to require. I mean, pollution liability is another one that people should think about depending on the space they're in. The sort of a non-standard coverage, but that if something goes wrong or someone's going to be handling hazardous materials, you're really going to want. Um, so that is the strong contracts are really important. And I think the other advantage to an enterprise like Jones is the paper trail that you have, and the accessibility of the documents that you've now done such a great job through your contracts and through your negotiations and your COI tracking. You've done a great job of making sure that they're there, and you need to be able to access them quickly if there's a claim, because if something happens and you need to tender to a GL carrier because you're tendering to OSHA within 8 hours or 24 hours or something like that is happening, you need to know who to be communicating with. And so that could be, and they could have changed carriers. So am I tendering to the vendor, and then am I making sure that they put on notice each of the carriers who could potentially be on that risk? And to do that quickly, you really need to have an organized platform where everything exists. And so I have loved the ease of use. It's very intuitive. The Jones platform is very intuitive and it's very user friendly. And so to be able to just have an SSO landing page to get on, to type in even just the first few letters of the vendor that I need, to pull up all of their history, to see the full policy, see the COI, see the communication status with the vendors. How many times have we reached out to them for X, Y, and Z or something, and whether there was a waiver on a certain provision, and if so, who approved it, so that then we have that internal, chain of command to say that somebody above approved. But it is that accessibility piece is something that businesses really need to be considering, because, if you're doing this manually and your COIs are maybe saved on a server, or God forbid, they're only saved in somebody's Outlook inbox or something like that. What's the business continuity plan for having other people access that information if they need it? Or if the server goes down, all of those types of things. And so there's sort of this redundancy for us built in with having it with Jones, that, we have access all the time to the information. We can download it. We can, archive historical records and all of those things as needed. But that, to kind of have a partner in maintaining and having the paper trail for us is really critical. And it comes up in litigation with claims all the time. You got to produce that. You got to produce this really quickly. You got to get that. And just think of all the time you save by not having to have a single person responsible for organizing and maintaining that. That's really helpful.
Yeah, I appreciate that answer, Alison. We are very thrilled with the partnership we have with Meritage. And also, I just want to say thank you so much. This was exactly the conversation I hope we would have. I think, everyone that joined as well, thank you so much for spending this time with us. We do have a question that I want to address before we
Mhm.
part. And that question says, one quick question. We are the tenant. Should our company business also be included as an additional insured on the vendor certificate of insurance, along with the property owner, board of managers, etc.? Alison, do you want to take that?
Yeah, what I would first do is look to the lease agreement. If you're the tenant, you've probably got a lease agreement, obviously, with the landlord. And the landlord may have certain coverages that are required, like you need a BOP and you need property and all of these other things. And so understanding first, what did that landlord require of you? Get that information. And the landlord might actually say, if you're ever going to have a vendor out there performing work or doing something for us, we need to be covered. Everybody downstream from you needs to be we need to be covered on their policies. And so start with the contract. And then absolutely, it would never hurt to have, if you can, get the vendors that are going to be out on your site, naming everybody up the food chain, anybody that you could expect to get an indemnification or defense demand from, you're going to want to move that risk if you can. So I recommend it.
Amazing. We do have more questions popping in. We're going to be addressing those questions in the follow-up email we're going to be sending because we are at time here. We'll be
Mhm.
sending all of you a follow-up with the recording of this conversation, answers to any questions that haven't been addressed, and a checklist of the topics we covered, as well as on, how to do some of this review yourself. But of course, you have Jones to count on if you ever think about automating your compliance review process. Allison, again, thank you so much. And thanks
Thank you so
everyone that
much. Thank
joined.
you.
Have a great rest of your day. Bye
Bye.
bye.